Hi everyone, it's Grace. Welcome back to my channel. So a little bit over a year ago, I actually predicted that a housing crash was coming. And the moment that you've been waiting for is finally here. So make sure to check out here for that video. For those of you who are already subscribed and followed my channel, thank you so much for your support. For those of you who are new to my channel, I update the Zillow data into map charts on a month-to-month basis and publish them on my website and Tableau profile. They're completely free for you to access, so make sure to check them out. I'm going to provide the links in the description down below. So in today's video, we're going to talk about the 10 metro areas in the US that's having a major housing crash. Are you guys ready? Before we begin today's video, remember to subscribe to my channel and click on the bell button so you get notified immediately when new videos like this are uploaded. Also, feel free to give this video a thumbs up if you find it useful. Please consider donating to my YouTube channel so I can push out new contents to empower you. You may donate through PayPal, Cash App, Zelle, or QuickPay, and I'll provide the links in the link tree in the description down below. Thank you so much for your support. So the first map that we're looking at is the housing inventory from last September to this September. And this is the latest update. And the color legend here, for those of you who are new to my channel, there are two sides. The blue side means that the inventory is decreasing, and the brown tone means that it's increasing. So if we compare the September map to the maps before, we're seeing a huge difference here. And I'm going to put it up just to have you have a comparison. You're seeing that a lot of these places are like going into the very darker brown tone. That means the very hawkish Fed funds rate increase is literally taking a really bad toll on the inventory. A lot more inventories are hitting the market, and so that has a huge impact on how sellers price their properties and also how these transactions take place. All right, so if we go ahead and take a look at the housing price map, and there's also two sides, right? So if it's in the green tone, that means it's increasing in value on a year-over-year basis, and if it's orange tone, that means it's decreasing in value. So when you compare this map to all the other maps before, at the beginning of this year, you're seeing that a lot of the Sunbelt states, they used to be in darker green tone, but they're sliding very quickly into the lighter green tone. So the housing price, even though some areas are still increasing a little bit, they're slowing down really, really quickly as well. And you're seeing that like these areas, some of the lighter orange tone, they're not even catching up to inflation. And for example, we're looking at Boise City is literally crashing by 4% right now. And this is a static situation. So when you're looking at, into 2023, that crash is going to be even higher. And the reason is just very simple. When you're looking at the 30-year fixed mortgage rate, this is the most used mortgage rate that people have to use in order to be able to afford a housing, right? 20% down. And when you're looking at the monthly payment, a year ago on October the 21st, we're actually seeing that the 30-year fixed mortgage rate is around 3.09%. And look at the rate right now. It's at 6.94%. So that's more than doubled. And you can imagine if you only put like 20% down or even a little bit higher all the way up to like 50%, right? How much more interest you're going to have to pay. And that's just, screen out a lot of people. A lot of buyers who used to be able to afford a mortgage payment, now they're not able to afford anymore. So that is the precise reason why you're seeing these huge changes in these two maps. All right, next we're going to put up these two maps side by side so you can have a clear comparison of the inventory as well as the housing price. But for today's video, I would encourage you to use the inventory map a little bit more because the housing price map is on a year-over-year basis. So you're not seeing the momentum of the crash on month-to-month basis. All right, so the first area on our list today is the Lakeland Winter Haven in Florida. I know that Florida is one of the very popular Sunbelt states, but right now because the mortgage rate is hiking so fast and it's literally like nearly 7%. And that's a big difference. So when you're taking a look at the inventory map, your eye should immediately go to the darkest brown color. So that's how you can tell the inventory is increasing really, really fast because of the hiking mortgage rate. And obviously there is a color difference among different regions, but this map is really, really useful to tell you which area is not as crash proof as the other areas. All right, so when we're looking at the pricing map, obviously this is on a year-over-year basis, so it's still increasing by 22%. So the next thing that we're going to do is go into Zillow and take a look at some of the properties there, how their curves are looking right now. All right, so I'm just going to type in Winter Haven, Florida in Zillow and take a look at the movement of the listing. I'm going to choose a random listing because clearly there's a lot of price cuts everywhere right now. So for this one, it's priced at $369K, so it's close to $370K. And then it has a price cut in September for $8K. So let's take a look at the price history. So you can clearly see that the price is increasing really fast. And then it was sold in August. And then a couple of weeks later, it was listed for sale again, increased the price by like 12%. But a couple of weeks later, it decreased the price by 2%. So this is a clear sign that I would qualify that as a housing crash because this 2% price cut is less than a month. So when you're calculating it into a year-over-year basis, it's absolutely more than 20%. And then obviously I'm not familiar with the listing, so I don't know if the current owner bought it for all cash or is there some kind of debt in it. But this is not working in this environment right now because the Fed is being so aggressive and this price trend is going to trend down even further. So you're going to see more price cuts, hefty price cut into the end of 2022 and 23. So I do see that as a huge risk factor. Unfortunately, for the property owners who want to sell between March and now, it's too late in the game because the Fed is being hawkish. And I do think that for the November and December meeting, another 75 to 75 or at least 50 basis point is very, very likely going to happen. And that's not good news at all for the mortgage rate because right now, think about it. In March, the mortgage rate, the 30-year fixed mortgage rate is at 3%. And right now it's nearly 7%. So that's more than doubled. It doesn't really matter if a potential buyer for this property, for example, is an all cash buyer because the most buyers, they still need to use mortgage, right? So that has a lot of impact on the demand side. So when the mortgage rate is increasing a lot, the buyers, the demand is just gone. The majority of the demand is gone. So that's why the inventory is hitting so much into the market. And then we're literally switching from a seller's market to a buyer's market right now because of this huge increase of the mortgage rate in the matter of 6 months. That's just plain fact. So the next area is Easton, also in Florida. Its inventory is also picking up by more than 50%. And so that is also a telling sign. Usually when you see this very dark color, that means a lot of sellers, they want to flip the house or they want to increase the equity in a very short amount of time. However, this kind of like it's a very risky market. It's definitely more risky than the other areas in Florida where you see, the color is really lighter. So this can give you an immediate reaction of how the inventory moves regarding to a certain mortgage rate, right? So in Easton, even though the pricing change is still more than 20% on a year-over-year basis from last September to this September. However, when we go into 2023, we're going to see this year-over-year change in percentage becoming negative. All right, so let's go into Easton in Zillow. Immediately, we're seeing like huge price cut, and that is not a good sign at all, especially for those who recently completed transaction between March and now. This is a very, very volatile period to consider. All right. So when we take a look at the price history, for some reason, this one doesn't really have a curve, but I'm just going to go to the history and take a look at it. And you're seeing that, this was sold back in 2006, at this price, right? At around 225K. And then it was recently listed for sale. For some reason, this place was not sold in between. I think that it could definitely sold for more than 600K if it was listed back in 2021. However, this is just too late in the game. Look at it. This price change, in less than 5 months, is more than 20%. So if this doesn't qualify for a crash, I don't know what is. All right. And then you're clearly seeing that the price cut is really, really kicking in. And then a lot more properties are also having this type of price crash or price cut. And the third area on our list is the Ogden Clearfield in Utah. Look at the inventory is picking up at 72%. So that's a huge telling sign. And on the pricing map, it's also reflecting right there. So the year-over-year basis is 7%. So that's less than the CPI, right? Less than the inflation rate. And that's also a very telling sign. So I'm not going to go into details too much in the Zillow. You can definitely check it out by yourself. And then the fourth place is Provo, Orem, also in Utah area, right? So the inventory is also picking up by 67%, and that's also a very telling sign. All right, even though the pricing is still increasing by 11% from last September to this September, but when we're going into 2023, this year-over-year change is also going to turn negative as well. All right, so when you're looking at the majority of the Utah area, I would say that, the inventory is really picking up very, very quickly, especially on the west side, but on the east side, not so much. So you do have to differentiate a little bit more when you're taking a look at these maps. All right. So this gives you a very, very clear idea which areas have more investors or people who want to, make a lot of money in a very short period of time. However, there are not enough people who are, interested in living in these areas or, renters. So that's also a very telling sign. So the next area is the Phoenix, Mesa, and Chandler in Arizona. Arizona is definitely one of the very hot Sunbelt states since the pandemic started. But right now it's increasing by more than 41%. And its inventory available for sale is just hitting the market really, really quickly. And when you're looking at last September to this September, it's increased by more than 7,000 inventory. And so that's a very telling sign. A lot more inventories are hitting the market because the demand is really slowing down. And that also has an impact on how cash buyers actually react. Because think about it. If you're buying with all cash, you're expecting the equity or the return to increase really, really quickly in a very short amount of time. But right now, because the real estate demand is driven by mortgage, because a lot more people still have to use mortgage to pay. So they're also hesitant right now. So that's what's happening in this very high inflation environment. And then when we're looking at the price change, it's increasing by 8%, but it's also going to trend down and turn negative into 2023. So what do you do in this high inflation environment to protect your asset as a whole, to protect your portfolio, right? Clearly, the inventory is picking up really, really quickly because of the mortgage rate. So you also need to understand how these interest rate really has an impact, not just on real estate, but also on the other assets that you have. So I also provide one-on-one coaching on my website. So I'm going to provide links here. If you're interested in, get ahead of everybody else, especially in the recession period and how to advance once the recession is passed, hit me up and let's talk more. So the next area on our list is the Las Vegas, Henderson, and Paradise area. You're seeing that the inventory is also picking up by more than nearly 50%. So that's also a very telling sign. So these neighboring areas is also worth noting, especially when the base inventory is really large. That means buyers have a lot more options right now. Not just because of that, but also because they have to pay a lot more in interest. So that's why they deem it's really not worth it, because I have to take on a lot of debt in order to purchase a really overvalued property that's just not within the risk tolerance of my household balance sheet. Right. So the next area is the San Francisco area. I mentioned that California is one of those areas where as soon as the mortgage rate picks up, the inventory is hitting the market like crazy. So that's why the housing crash is actually expanding from the West Coast all the way to the South and to the East. So we're going to see this type of effect kicking in really, really quickly, and also taking a really bad toll on the other areas for the rest of this year and also 2023 as well. All right, so the San Francisco area, its inventory is picking up by 4%, even though this number is not that great. But when you're looking at a price change, the base price is already very high. But when you're looking at a year-over-year change, it's only at 3%. So that's not even like remotely catching up to CPI. So when you're looking at 2023, it's going to trend down like really, really quickly, especially when you're looking at, the majority of the California area is turning into, the orange tone in terms of pricing. So that's also a very telling sign. All right. So next up, we have Seattle area. This area also increased its year-over-year change in the inventory is picking up by 23%. And so that's also a very telling sign. And when you're looking at the price change, it's just a little bit over the CPI at 9%, but that's also going to trend down as we go deeper into the recession. So the next area is in the greater Nashville area in Davison, including Davison, Murfreesboro, and Franklin. All right, so its inventory is also picking up by 45%. So this trend, this percentage change will also be more than 50% as we go deeper into the rest of this year. All right. So its year-over-year change is still 22%, but into 2023, you're also going to see this trending down like really, really quickly. All right. So the next one we're going to see is in the Austin area. One interesting about Austin is that its housing price is really overvalued. However, when you're looking at the rental price, it's actually not that high. So that is also a risk factor there, because if it's ballooning like really, really quickly, the rental price might not even be able to cover the cost, So in the Austin, Round Rock, and Georgetown in Texas area, the inventory is also picking up by 38%, close to 40%. All right. So you're already seeing that the price is trending down, and its year-over-year change in price is 6%. So that's also less than the CPI. All right. So also pay attention to these neighboring areas where the inventory colors are really darker in a brown tone. So that will give you a very clear idea which areas is gonna have a really bad effect because of the increasing mortgage rate and increasing inventory. All right, so this is so much for today's video about the 10 cities that are experiencing a housing crash as of September 2022. And I hope you find it useful. I'm gonna provide links from my Wix site and also Tableau profile in the description down below. So make sure to check them out because they're very, very useful. Remember, these maps are completely free for you to check out. If you have any further questions about your portfolio, we can set up a one-to-one coaching session. All right. Thank you so much for watching today's video, and I'll see you on the next one.